Hi everyone. Today let's talk about why the markets are super overvalued, but it was fun while it lasted. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Goldman came out and said the S&P historic run is over, but it was very fun while it lasted. We've been going straight up for a while. And they say high market concentration tends to lead towards lower long-term returns, because even the superstar firms cannot continue to maintain that extreme growth in margins indefinitely, and then you start to see those bigger pullbacks. This is what we've been saying for a while. Can those biggest stocks continue to hold up markets? The medium to long-term answer is generally no. In the short term, it can happen. And really what they're saying here is if you've been pulling in that 13% return year after year, just buying the S&Ps, it's probably time to start rethinking that. The gravy train is getting slower. The US stock index is generally returning 3% annually over the next decade, so we'll see if that comes to fruition. Obviously, that's a very long-term perspective, but he says here, I largely agree, and I've been banging this drum for a while. It's always hard to say that because market timing is always a challenge, and I've been saying it on here for a while. I do think we're in a bubble, but bubbles can go on for years, and they can continue to go higher for a very long time. Trade the market that you have, trade the price action that you have, but in the back of my mind, I'm always thinking about how those medium to long-term charts are probably going to be bearish from here. Again, trade the market you have, but market concentration, not a great indicator. When we are extremely concentrated, usually that does not go well, and that's what they're saying here. Bigger concentration, lower returns, where if you have those broader rallies, then you tend to have bigger growth. And really, even if you do well in the short term, they're saying that you're experiencing higher risk with lower reward. 3 to 7% returns is not super great relative to where the S&Ps has been. And you can see those 10-year returns here. When the market is super concentrated, you can see S&P market concentration. The more concentrated you are, the more likely you are to see those lower returns. Occasionally, you can see those outsized returns. Gray observations equal recession, so you can kind of see those bear market rallies. But usually, the less concentrated, the higher those returns, generally sloping down in a way. So what should you be aware of? Returns over the next decade could fall, could be a lost decade. We've talked about it on the channel before. Is it going to be a lost decade? And how do you invest in those kind of markets? High valuations give markets more limited upside. Lower interest rates could help, at least in the short term, but there is zero room for slip-ups. We've been trying to maintain those higher interest rates and a soft landing scenario, which so far seems possible, but we have not really seen that resumption in growth that we need to see to allow markets to continue to go higher. Secondly, they say here markets have benefited from globalization, companies being able to spread their product across the world and achieve growth that way. But now that's starting to be a little bit of a hamstring. There are still some buybacks and time-limited tax cuts that are allowing for fiscal stimulus, but it has been tougher to achieve that growth, even with the globalization of markets. And then looking at market cap, you can see where we're at right now. Market cap very, very high. As a percentage, we're in that 38 number here. Very, very high concentration, and generally that leads to lower markets to come. I've been saying it for a while, like I said. Diversification, you can trade your money the way that I do here, but keep in mind, buying for the long term, make sure your long term is greater than 10 years from now. Otherwise, we are likely to see cheaper prices at some point in the future, in my opinion. Let me know down in the comments section what you think of the market concentration and the potential returns over the medium to long term. Is it going to be a lost decade? What are you doing to try to avoid this potential outcome? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.